Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar. This video is being filmed on Wednesday night for Thursday's trading. That is November 5th, 2009. And traders, this video is going to be about two different markets. 30-year T-bonds, where we have a red Emini going down for tomorrow. And we have Euro currency with a green Emini going up for tomorrow. Now, I know the ECB is going to not do anything with rates tomorrow, but what you should find as an analyst, or what I was going to say was what I found as an analyst, is that there is no way that Euro can go down tomorrow because the analysis says the fundamental pushes the Euro higher. So I'm going to go strictly off of the analysis, which is what I'll show you in a few moments in some charts. I think you'll find the analysis compelling enough to want to get long this thing. Then we have the 30-year T-bonds with the head and shoulders pattern and a bearish flag combined together, pointing towards the downside with bearish indicators. So I'm thinking that that one should head down, this one should head up, and the S&P, after watching yesterday's action, after the Fed did nothing with rates as expected, you know, the S&P doesn't look as weak as it did just 2 days ago, but a lot of this is based on the Dow Jones Transportation Average deemed the leader of the indices, and it's very indecisive right here. The analysis on the transportation average is not as clear as the analysis in some of the other indices. So what I think we'll do is sidestep the indices for a couple of hours, see what's going to happen, and then we'll get in. Omni has a trade developed for tomorrow in the S&P as well, but I'm going to keep that off on the back burner for now. We'll talk about the 30-year bonds and the Euro currency, and with no further ado, traders, let's go to the charts. Okay, traders, we are looking at the Euro currency December daily bar chart, and it's got one of our proprietary averages that we like to use here at the Omni Trading Academy on it, and as you can see, look at all the times we've come down to this average and bounced off. 1, 2, 3, 4, almost 5. Now we tested it yesterday and rallied, or I should say 2 days ago. Then on yesterday's trade, we rallied up very nicely, and the indicators look quite bullish. So I say with all of these confirmations that this average seems to hold well, I like it, and I'm going to go with what I think is an upside trade. So when I'm done looking at that, I said, let me go start to look at other indicators and see if the indicators that are on the Euro are as bullish. And you know what I found, traders? I think you're going to like it. Let's look at some indicators here. Okay, traders, again, staying with the Euro daily bar, this is the slow stochastic oscillator. And as you can see, we came down to the very oversold area, made a hook, percent K and percent D crossed, and this looks quite bullish. So I said, well, indicators are starting to look good. Let me look at more, and I'll show you a few more here, and I think you'll get the picture. But that's the slow stochastic on the Euro. Let's look at the next indicator. Okay, traders, once again with the Euro daily, we're looking at the CCI, or Commodity Channel Index, and once again comes down to the oversold area, has a cross between its averages, and is now looking higher. So I like what I'm seeing here. I think that we could start to move higher based on indicators and chart formation. I think whatever fundamental will be released from ECB tomorrow, it'll certainly push this higher, at least based on the analysis. And we certainly believe that analysis always shows the fundamentals first, right? Fundamentals come out in the charts first. Well, I think that's what we're seeing here. Let's look at one more indicator. Okay, traders, staying with the Euro, this is now the RSI, or Relative Strength Index. And once again, look at how this indicator came all the way down to where normally it goes down too far and then has a nice smart rally. Well, here we are once again, and I think you have a little W bottom here, and once again, another bullish indicator. So the Euro looks good as far as the formation's concerned. You see how the chart bounced off that average? Then the indicators are just beginning to point towards the upside. I think we have a good shot of seeing that green Omni for Euro currency work well tomorrow. So that's your Euro currency, traders. Now I want to show you one chart, and it's the bond chart. And I think you'll like the formation that you see here and see that it does agree with the red arrow for bonds. Okay, traders, we are looking at the 30-year T-bond chart, December daily bar. This is a December daily bar of U.S. T-bonds. As you can see, clearly we have a head and shoulders formation, and that very same average that kept the market in check all the way up. We are now below that average. It's gone up and tested it and failed. And on top of that, look at the flag right here. That is a bearish flag in the right shoulder of a bearish head and shoulders with indicators pointing lower. As an analyst, there's nothing I can do but sell a rally in this market and expect downside. That's a picture of the 30-year T-bonds daily bar chart, traders. Pull your own charts. Take a look and see if it looks like that to you. I think it will. I think you'll agree that the indicators are still pointing lower. That is a bear flag. This is a head and shoulders. And we are below the average. Nothing else I can do here but call for a red Omni. So traders, that's the chart segment there. Please pull your own charts, do your own homework, and make sure that you agree with both the direction and the recommendations at the site before considering taking the trade. So, traders, did you see those Yankees, baby? Yeah! Go Yankees! We got the Yankees on the World Series! Yeah, Yankees! Now, did you see those charts? Because that's what's more important here. Those charts are quite compelling if you are an analyst, no doubt. They're pointing in the proper directions. One pointing this way, one pointing that way, of course. Bonds pointing down and euro currency pointing up. Now, traders, will this work? The analysis is pretty compelling. Well, how am I supposed to know? Can you imagine if I only knew once? It'd be the last trade we'd ever have to do. But the analysis is about as close as we're going to get to a well-rounded, educated guess. And then, of course, a stop is your best friend. So if it doesn't work, at least our stops are in, so we get knocked out of the trade at a reasonable level and a risk-reward ratio that we can handle and live with. So make sure you place your stops, make sure you place them first, and put your orders in. Don't be afraid, traders. That's what trading's all about. Get your orders in, put your orders in, your stops first, of course, and then just relax, traders. I tell you this in every video. Literally, when your stop is in, if you're in a really thick market like the ones that we trade, basically you're getting stopped out almost no matter what situation occurs. You will get stopped out, and you'll stop losing right where you expected to stop losing. So if you place your orders, you do keep your emotions out of trading if stops go in first, and you always use them. So please do that, traders, because no joke, a lot of traders that I have trained or taught or helped or analyzed with or was a mentor to in these last few years, I'll tell you what, once they realized that once their stops are in, there's nothing to get nervous about, they became much better at their jobs. And I'll tell you what, when you sit in front of that screen every day, and if you're going to have a heart attack over every trade, you're going to have gray hair and you're going to die young, because this is not the industry to be panicked on every trade. So put your stops in, put them in first, and just relax, traders. I guess what I'm trying to say is keep your emotions out of trading. And one of the best things you can do is say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are in. Emotions are out. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I'm a 27-year seasoned trader on and off the trading floors. This is how I've made my living for many, many years.